Welcome back to the channel, folks. Today we're talking about AMC, and I think this is time that we start addressing some of the misinformation going around for the stock. And I hate that people are not doing their due diligence. They're not looking at the facts, providing you opinions, which really don't matter anything. If you're looking to invest in money, at least have some visual confidence that, okay, I see what you're saying. Let's take a look. Let's see if we agree on the same thing. So let's talk about the misinformation that's going around. Ontario Capital in specific, they're saying they're loading up on calls. The stock is going to take off. But if you look at the SEC filings these guys are doing, they're betting against the stock. So I'm not sure whether they're not reading this correctly or what's happening here. So let's take a look at the form they filled out with SEC. Okay. Now, before I look at the form, I want to show you a definition first. Okay. What is a put option? A put option is a contract that provides the buyer the right to sell a security. So as a buyer, let's say you're buying a put option, you have the right to sell a security. The writer of a put option, which when you go to sell a put option, the writer of a put option has an obligation to buy the security at a specific price. So if you're selling a put, you have the obligation to buy that security at that price, okay? But as a buyer, you have the right to sell the security at that price. So let's look at the form right now. And I did download this form on Excel. So I'm going to go to Excel sheet because I did copy everything here. And let's take a look at from the Excel sheet. Right to sell Ontario Capital for expiration is March 16th and April 21st and June 15th, June 17th. Total 14,549 contracts of options. If you look at this, this is shares. Okay, you divide that by 100 because every contract is 100 shares. It's 14,549 contracts these guys are buying as a put option, which means they're anticipating the price of the stock to go down. Let's take a look at the options, call option, right to buy. Okay, let's go to call option. Let's do the sum. We're going to do the sum here just to determine it was 14,000, right? Divided by 100. 13,000. Sure, they're buying calls and they're buying puts, but puts are greater than the call options, which means they're anticipating the stock to more or less go down, not go up. But the way it's presented, it looks like the stock is going to take off. This is what the problem is, right? Let's say if we go to the obligation to buy, an obligation to buy is already done because, the expiration was last week. So let's go to obligation to buy. All right, obligation to buy. Again, as I said, that would be put option. When you have an obligation to buy, you are the writer of the contract. Obligation to buy. Let's do a sum here. Divided by 100. 13,355. And look at the expiration. 2/21. Already done. All right. Only 10,000 they're doing for the April, but most of it is already done. And if we go to the chart, by looking at the charts, we can say, yes, there was an upward momentum here. And let me show you guys a horizontal line right here. You see the stock was moving in an upward direction. Now it's coming down. So what are they doing is they're buying put options right now and they're buying call options, but put options outweighing them by almost 1,000 contracts, which means they're anticipating the stock price to go down. On the charts, I have a couple of levels, right? As I always talk about demand and supply. Everything is demand and supply in stock market, okay? There's a lot of demand for these prices, $5.02, $5.12, $5.18, and there's a lot of consolidation. It can happen between $5.18 and $5.33. It can consolidate between this. This is a hot area because I've seen it from the previous charts. This is a hot area. Again, there's a lot of supply at $5.33, a lot of supply at $5.52, a lot of supply at $5.66. What supply is? It's really when the stock gets to that level, it gets rejected, it comes down because a lot of people are waiting to sell you the stock at this price, and which is why the stock price comes down. So with that being said, these are my quick, immediate levels. Again, this is daily thing. It's not something that you can predict for future. I'm going to try to predict for, 1 month out. It's just going to be every day. The stock changes, the valuation changes, but again, these immediate levels help you determine how you want to play this, right? So these are a couple of levels. The stock only moves like 20 to 30 cents or 40 cents a day. So don't expect, and again, of course, there could be a short squeeze. All these potentials could come in. But what I'm trying to say is the information to have it on your hand that, okay, if you talk about squeezes, right, that's gambling, right? Now, yes, it can happen, right? It's like playing a lotto. If you're playing a lotto, yes, you could win, but you could lose a lot of money too. So you don't think like you want to playing a lotto here. You want to be able to at least make sense of these things, be able to invest and make dollars every day. So my objective is to get you guys information, the right information, at least you can make use of that. These are the immediate levels. I can see the stock, even if it takes a leap, it could go to $5.66, but it has to cross all these resistance, all these supply levels before it could get to $5.66. I mean, I just want to put this video out for you guys, just a quick one to give you guys right information. Hope you guys liked it. If you did, do give it a thumbs up, subscribe to the channel. I'll talk to you guys in the next video.